Welcome back to Ferocious Education. This is Zed. Today we're talking about Clover Health. I'm giving you a quick update here to give you a bit of perspective on what's being called the short squeeze here, and if that is actually the case, some of the things that we're looking into, technical analysis, and institutional buyers. So let's jump right into this one. So my last video is in the description below. If you'd like to go there, it's in the description. But let's take a look into the latest news since my last video. There is one piece of news that is new. Dimitrios Kozaks, former director of the Center of Medicare and principal deputy administrator of CMS, joins the board of Clover Health. So Clover and the US government have shared missions of supporting the health of Medicare and beneficiaries and making every tax dollar as impactful as possible, said the CEO Vivek Garpali. Dimitrios is a significant addition to the board, having led legal and regulatory affairs department to the Medicare division at United Health. He understands the opportunity and challenges of operating at this scale. He has an encyclopedia of knowledge of Medicare rules and regulation combined with an incredibly astute business strategy acumen. We are grateful that Dimitrios is joining us on this very important journey. And they go a little bit about their background, etc. Prior to joining CMS from 2012 to 2016, Dimitrios served as a general counsel for the United Healthcare and Medicare Retirement Division. And prior to that, 2003 to 2009, he served in the U.S. Department of Health and Human Services, HHS, where he was Principal Associate Deputy Secretary with responsibility for regulatory policy across the HHS and Deputy General Counsel. And then we move on a little. This is an SEC filing that just repeats what I just said there. We can move on towards the short interest. And before we do so, if you'd like to see more contents like this, make sure to scroll down below, click that like, there's a subscribe button here, click that and notifications on, click to show more. And if you'd like, you can join us at Discord right on here, totally free, no obligations. So let's take a look into the short flow, the short interest. A lot of misinformation might have been that are calculating it at 140% and comparing it to the next GME. And I'm sitting there and I'm wondering, like, where did they really get 138% or 140%? We'll go through that little bit by little bit. So the first thing is here on the short flow, from we just go to FinViz here, we're looking into 35.79%, which is somewhere in terms of the shorts itself, you're looking into 35.79% out of the 107.57. Now, if we were to look into the general outstanding shares, that doesn't sit at 35.79 anyway, but you know what? We're looking into 35.79, and out of that, even on Yahoo here, you're looking into 38.5 million, which makes sense. Now, if you were to look into held by investors, shares, and institutions, you're looking into around 24.84 and 35.34 respectively, and what they're comparing is the remaining out of that flow. Now, I did go ahead and did a little bit of more snooping around, and it is 35.70, around that, 35%. GME was around more than 100%. So, honestly, before looking into Clover Health being the next GME, what about ASA, Root, Autrig, Billing? There's a lot of other stocks that are on there. But nonetheless, let's take a look into this basically article that seems to be a little bit interesting for me, and I'm not sure what you think about this one, so mention it down in the comments below. So analysts and commentators began looking into actions at Clover Health before the market opened on Friday. According to data from FactSet, it appeared that the Observer, the short interest had ballooned to an eye-watering 149%. This is based on a report, a flow of 26.3 million shares, which was evidently erroneous, as investment research firm Hindenburg Research pointed out in a post published an hour before the market closed on the weekend. The premises of the squeeze in Clover Health today appeared to be a data error. If it looks like a fact sheet, earnestly remove the CEO Vivek Garpali's Class B shares and Class A from the float calculation. And then basically goes on. Some analysis, such as Iyer Denswasky of S3 Partners, argued on Friday that this exclusion was justified. Not everyone was convinced. Investor and market commentator Cubo, for example, questioned the rationale for such exclusion. Why would you deduct the CEO's $83.5 million Class B shares, which are a total of $261 million from Class A shares, of which there are 145.3 million, which is still going nowhere close to 26.3 million. Based on a simple math, Clover Health, the current counts and the floats, it seems that the short interest were likely nowhere close to where it's being reported previously. And this kind of continues on towards the short interest thing. I'll talk a little bit about it just as we go towards technical analysis and what I think about this one. Are we going to go ahead and see the price targets that a lot of people are putting in $100 and where we can go from here? Now, what I'm going to do here is I'm not going to say, oh, this is a breakout, etc. on technical analysis, because a jump like this, of course, not dedicated by technical analysis, will show you that it's highly oversold. The ADX didn't budge much. The momentum is positive in the MACD is going towards the positive increasing wise, but it doesn't show much other than it's a move, it's a jump. So let's take a look into some of the interesting thing. Take a look into the volume. You've hit 240 million shares traded on today, and on Friday around 250 million. Now take a look into that move. You see that this one here is not budging much. It's almost a doji star here, and it's a hanging doji star. What does that mean? I'll tell you in a second, but it looks like this entire push, and I don't think it's blamed on the shorts, etc. I think that in that sense, where a lot of people are forecasting this and taking a look and saying, oh, this is 140%, 130%, but this is not a GME, because GME was 138% period. You didn't have to start taking out shares here and there, then you're changing the narrative. And I think that a big part of it is that some people recognize and that this is just more of a pump and dump at this point. I'm gonna get a lot of hate for this saying this, but a lot of folks subscribe to me to see actual good content that is truthful, and I'm not gonna ride on that pump and dump. And so there's a lot of bag holders around here. We'll talk about the supports, and so as you go higher, people will just want to sell. Will it reach $100? I will answer that at the very end. But take a look here into the volume. This is the highest volume it ever has seen, 250 million shares, and it barely budged on the second day. On the first day, yes, it did budge. It went from 740 all the way down up to 991. Currently, yes, it did jump a little bit from 971 to 1048, but with 250 million volume is decreasing a little, and that's a warning sign. It shows that the ammunition is running out. Now, stochastic fast and stochastic slow might show you that there's another push potential, another leg up, but these indicators don't work well with such events. And so what I want to do here quickly is just try to see Fibonacci retracements. Where does it show the next support and resistance? And it shows you that the next support on the Fibonacci retracements is the 889 level, followed by that 631. Significant resistances 1049, 1178, 1307, 1491, and 1725. And some just random price line actions. You're getting to see that there's a very strong support sitting at 938, a lot stronger one, an 892. If it does break this one, I don't think it's gonna come back from there on a day action. 822 after that, and a very strong one at 765, followed by that to 710. Significant resistances, you're looking into $10, that's a strong one, followed by 1053, that's another strong one. Then from there 1151, from there 1238, and then you can easily jump towards the $13 to the 1377, and then from there 1544 and 1597. And comes to the question to Ed, do you think it's going to reach $100? Well, here's the thing. Pumps and dumps will move regardless of the narrative. If you convince enough people with misinformation, or just trying to convince them that this will reach the $100, it might as well do, because you're basically what you're trying to do is you're buying this one in the hopes that the next person buys it more expensively, and at some point the last person that is going to hold that bag will pay for it. And it's not a bad thing, but I'm just saying that fundamentally, no. From a technical analysis point, I doubt it. And from a short squeeze point of view, it's only around 35%. Can you short squeeze it a little? Yes. Maybe to 15. Maybe. But not to $100. Because you're calling and screaming that this is the next GME. GME had above 100% of the entire float into short interest. This has 30%. And there's a lot of other stocks that are shorted more than this one. So you can't just completely omit all the shares out and just start calling this one a short squeeze. And it does look like this is not really budging. It's more of a doji star at this level, and it looks like it might be running out of fuel a little. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.
Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.